All right, let's get to it. Welcome to the podcast, Ash. I'm happy to have you here. How you doing?
I'm doing well, Tanner. I appreciate you having me on, man. It's a privilege, dude. I'm
Mhm.
hoping to answer a couple insurance questions you might have for me, and yeah, see what we can do, man. I appreciate you having me on.
Awesome. Yeah, so we're going to talk about insurance today for a lot of homeowners and investors out there. But first, let's give a little bit of background on you and how you kind of got to where you are now and into the insurance space.
Yeah, man. It's a really interesting story. I got about a year ago. I got a life coach, and I was looking. I was actually working in an architecture firm, a really great firm, but I was looking for something different, looking to get myself into the sales game, and he gave me three options. Either I could become a realtor, a mortgage broker, or an insurance agent. Those are the options he gave me, and he got me in touch with someone that's with the company that I'm currently with, Brightway Insurance, down in Florida. And from that connection, I had made the connection with Brandon Kolk, who's here local in Colorado Springs. And I called Brandon. I was like, "Hey, I've got your connection from this guy in Florida. Would you be interested in meeting? I've got a flight in 2 weeks. Would you, would you be able to make some time for me on a Friday?" Uh, just a quick brief story. I hadn't bought the ticket. I was more or less just trying to get in the door and whatnot. And so after
Mhm.
that meeting went well, I bought the ticket and I came up to Colorado Springs. It went really well. And so then he was like, "Yeah, man, however long you need, take the time. And then, whenever you get licensed, I'll have you come in and, we'll see what we can do from there." So I moved up probably, I had some, personal matters that I had to take care of, but I moved up in early September, and it took me a couple tries to pass the insurance exam, which is a whole nother story, but it took me a couple times to pass that. And then I started working in late September for
Okay.
Brandon.
Quick question
Mhm.
about the insurance exam. What's that like process like for studying? How long does it take you to study for that?
Yeah, man. It's probably a 2 week process. You go. It's more of it's kind of a state regulated thing. They put
Hmm.
you through all this stuff, and they want to make sure that you're ready to go. But it's also a moneymaker for the state. So you have to schedule the exam at this testing center, and it's all it's intimidating, and for especially for test takers. And the wording of the state exam is real interesting. But yeah, it probably takes you 2 weeks to study, and then I would say at least takes you two times to pass. Because first time you go in there, you kind of have to understand the wording and how the
Hmm.
questions are based, and then you go in again. You usually most people pass. It actually took me on one of the tests. It took me three times. If I'm just
Hmm.
being so completely honest, but yeah, man, it's you kind of have to learn how the state asks the questions. So
Uh-huh.
yeah.
Seems kind of similar to what the real estate exam was like because it was probably like you do the class, you do a bunch of studying, and then like you take it a couple of times to actually like feel it out. I'm like, okay, these are the types of questions that you're going to be asking and stuff like that. Um, on the exam, is it like everything you learned like exactly translates to selling insurance stuff like that, or like on the real estate exam, it was like, oh, we just learned all this stuff and now none of it is really can be used as a real estate agent now.
Oh man, that's a great question. Yeah, so it's when I first walked into Brandon's office, my first day of work, he was like, "That's great that you learned everything. I want you to forget everything you just learned for that exam, and
Yeah.
then the real learning will begin." So yeah, man,
Yeah.
it doesn't really correlate between selling insurance versus the knowledge. I mean, you kind of pick up. I feel like you could probably attest that you kind of pick up as you go.
Hmm.
It and everyone's different. Each client is different. Sale is different. Each experience is different. So you kind of learn
Hmm.
as you go.
Hmm.
Hmm.
Yeah, so each house is different, but everyone does need home insurance. Is there a common type of insurance that everyone gets for their homes?
Yeah, yeah, absolutely, man. So one thing so if someone buys a house, whether it's an investor or a just a typical home buyer, you're gonna want a HO3 policy or a DP3 policy, depending on if you're a homeowner versus a landlord, which is the same thing as a like an investor.
Gotcha.
But typical homeowners they'll buy an HO3 policy, and it's all the same. It's pretty much covering the bones of the house. So it's excluding land and views, but it covers the lumber, the contractors, the materials, the blood, the sweat, the tears, all that goes into rebuilding the house. That's all it covers.
Hmm.
And every homeowner, it doesn't matter which situation. It doesn't matter if you have a $5 million home or a $75,000 home, every homeowner should have them. And I'm not saying everyone does, but every homeowner should have them. And it
Hmm.
doesn't change. It's usually same coverages. It's super simple. Uh, yeah, it's easy to get confused, but it's super simple when you're buying a home because it's like, hey, this is what it's covering, and you have personal property and all that other stuff. But it's just one policy. There's not a bunch of different options. I mean,
Hmm.
we can get into that later, but yeah, it's just one HO3 policy,
Hmm.
and it just covers the bones of the house, man.
Gotcha. Um, so what are some of the factors that determine the yearly insurance cost? Is there like, oh, okay, this is just the bones policy, but if you pay more, then we can cover like plumbing and electrical as well, or the roof.
Right. So, yeah, great question, man. So everything that goes into an insurance policy, it covers the roof, the plumbing. If you have like a water leak or something like that, it'll still cover that. But what
Hmm.
goes into that is your something that's called an insurance score. Very similar to a credit score, but it's in the insurance part of things.
Hmm.
Um, and what make the factors of that are claims. Like if you have a big hail damage and you've got to get a new roof, that's a claim. Or if you have a plumbing that backs up, something happens with the plumbing and you have to file, hey, this damaged my drywall and it damaged the downstairs
Hmm.
basement. That's another claim, and each claim has its own severity of what. Yeah, each claim has its own severity of what it does to the insurance score. The more
Hmm.
claims you have, the more it affects the insurance score. Another
Hmm.
major cost factor is roof age, especially here in Colorado Springs. We see a lot of hail.
Hmm.
And if you have like a 2012 roof, it doesn't seem that old, right? But it
Hmm.
is, man, dude, it is, that's an old roof in Colorado because of the roof damage. And some
Hmm.
insurance companies will just make you ineligible because of how old the roof is. So there's
Hmm.
just a couple different things. And then if you're wanting to save money, a lot of companies, carriers will offer high deductibles, which it's great in the beginning. We like to think of it as price versus cost. The price is cheaper, but then the cost in the back end is so much more. So it looks
Hmm.
really good to the clients when it's
Hmm.
presented, but then when they have to go get a new roof, I mean they're paying like $15,000 out of pocket for a $30,000 roof, and you're just like, oh, I don't have $15,000. So now you have
Hmm.
this unclosed claim, and you have all this mess, and now you can't sell the property, and it's a whole mess. But people will sell that and be like, oh yeah,
Hmm.
man, this is how it goes. So
Yeah.
yeah, man, it's a crazy world.
For the claims process, you said the more claims you like apply for, the higher insurance costs you're going to have. Is this just like, okay, I have one insurance company, I file my claim, but I stay with them so they get to see all my past claims. But if I say go to a new insurance company, are they going to look at my past information from that other insurance company on my claims data?
Yeah. Once again, another great question. Yeah. So it's like it's very similar to a credit score. So when you're going in and you're buying something, if you're applying for a new credit card, they're going to look at
Hmm.
every credit card you have in the past and like how did he spend it?
Hmm.
Did he max it
Okay.
out? So it'll still
Hmm.
come up on the report.
Hmm.
But there are some ways to exclude it. If it's like a hurricane comes in and you have to do
Hmm.
something, that's a little bit different. But in terms of
Yeah.
Colorado, yeah, they're going to look at most of the claims and
Hmm.
see what you did, and it just depends. If you have one or like this is just a typical home buyer right now. If you have one or less, like maybe two or less in the last 5 years,
Hmm.
generally you're all right. But if you're up
Okay.
into the 4 or 5, and you're just filing claims, left and right,
Hmm.
it could be a
Okay.
little tricky, to find you an
Uh-huh.
affordable insurance policy.
Yeah. So would you recommend for getting a new roof, you have some hail damage, to always go through the claims process?
Um, it depends. If you have, I mean, this is just guesstimating numbers, but let's just say a new roof costs $30,000. Most people don't have $30,000 that they can, spend on it. So one
Hmm.
thing that I always tell, my clients is I always self-insure for the things that I can afford and then insure for the things that I can't afford. So if I own a house and I need a new roof, I'm not going to have just 30,000 just, write a check for. So I'm going to
Hmm.
insure for that. But if someone breaks a, $500 window and tries to rob me, then yeah, man, I might, spend $500 to replace that window. You don't want to submit small claims. If you're going to submit a
Hmm.
claim, make sure it's a big one, which
Hmm.
is probably best advice I can give anyone is just if you're going to submit a claim, make sure it's something huge that you can't
Hmm.
afford. Hmm.
Gotcha. Okay. And once you do submit that claim, is it just you go online, you say, "Hey, my roof has damage, come look at it," and then they send someone out? And how's that process go after that?
Yeah, so if you need a claim, let's say a massive hailstorm comes in and you're filing a claim for, hey, my roof's damaged, I need a new roof. They have
Hmm.
you first file the claim with the company that you're with, and I highly recommend working with a broker that has many different options. I'm not going to badmouth anyone, but some carriers are different than others with the way they handle claims. So you want to make sure that you're with a company that handles claims effectively and quickly. But all that you
Hmm.
do is you let your insurance company know, hey, I'm going to file a claim for my roof. They send a claim expert out. They come out, take a look at it. Then you have a contractor come out and give you a quote. You send that quote back to your insurance company. They match it. And if it's a good company, you'll be able to, make sure that the price is roughly the same. So you're, as the
Hmm.
client for the insurance company, you're getting paid back what you need to get paid back. So then they
Hmm.
can pay the contractor. But like I said, it
Gotcha.
just depends on the carriers, and the process can be simple. It can take a couple of weeks, but
Hmm.
it's not too bad if you have a good insurance company.
Yeah. Okay, cool. For rental properties, we talked a little bit about the difference in is it the HO3 versus what's the one for investors?
DP3,
What was it? The DB3?
DP3. So
DP3. Gotcha,
yeah,
gotcha. Uh-huh. So
yeah.
for that one, what is it mainly just, oh, it's a rental property, done deal, you get this policy, and does it cover anything different?
Just a little bit. It's pretty much like I said. It's covering the bones of the house. Like the lumber to build it up. The everything that builds the house up. It still covers that, but where it
Mhm.
differs just a little bit is, well, let me just say this for the rest. So, what we call it is a landlord property versus what you guys like investors call it, which is a rental property. It's the same thing,
Mhm.
but it's just landlord is insurance word for rental property. And what the only change in that is that the personal property, which is what you own, is a less. So in a normal home, if I have a $300,000 home, I'm going to give them $150,000 worth of personal property, and that's every. If I took the roof off and shook everything out, that's what personal property is. But for a DP3, it's a little different because you're not living there, so you don't have all that
Mhm.
stuff. You might have a washer and a dryer and a fridge, and just some miscellaneous things that to keep make it easier on your tenants to live there. So the personal property is a little bit lower, and they usually range a little bit lower than what a normal homeowner's policy is for that main reason.
Mhm.
Everything else though is the same, so it
Gotcha.
doesn't change a ton. Mm-hmm.
Mhm. And so what about if someone, like a lot of the investors I help out, do house hacking and they live in the property, but it's also a partial investment property? Are they still doing the DP3 policy, or are they just like a combo of like DP3 but also will cover your personal items as well?
Yeah, that's a great question. So, I'll try to make this as simple as I can. So, if they're living in the house, they would still they own the house, they're living there. So they would still have a typical HO3 policy, which is just a typical homeowner's policy. But then your renter, to cover his personal belongings, he would get what's it called, an HO4, which is a renter's policy. So for me, I live in an apartment right now, and I just pay for like what's in the apartment, right? I don't need to pay for the whole structure or anything. I just need to pay for if the apartment is damaged. I'm only going to pay for to get my life back and going. Hmm.
Hmm.
Yeah, yeah.
Mistakes that people make with insurance.
Um, so the common mistake, I would say, just when I talk to people, it's they'll get a cheap policy from State Farm or something, or just an example. It could
Hmm.
be anyone, Allstate or Progressive, whatever. And they're like, hey, this policy's $300 cheaper than yours, and I look at it and I'm like, oh, okay. What they have is high deductibles, which means like a lot of people or carriers will send out 1% deductibles, and that looks great, but no one knows what that means. So if you have a $300,000 home, that's a $3,000 deductible. That's 1% of what your coverage A is, pretty much. That's a
Hmm.
simple way to put it. So they kind of send that out, and it's an illusion, like, oh man, it's really cheap, and I
Hmm.
don't have a major deductible. It's only 1%, but most
Hmm.
people don't know what 1% of what 1% of what. Is most time the question that
Hmm.
is asked. Um,
Yeah.
which brings me to my next point, which is price versus cost. It's like, yeah, sure, it costs $200 less to go with this company per year, but the cost on the back end to, replace a roof or,
Hmm.
replace, a fire damage, the deductible on that is so much more that you're going to be paying $5,000 more to, get your roof replaced if you would have just went with
Hmm.
the base deductible. I mean, that's a really common mistake that people make, and everyone. I'm not gonna say everyone. Most people want cheap insurance. They want.
Hmm.
Price is a big deal. I mean, regardless of what business you're in, it's price affects everything. But in terms of this, it's what are you getting the price versus the cost? Like what in terms of the lower price, what are you really getting out of that? Versus if you really need to file a claim, then how does that affect everything? So price versus cost is a big one.
Hmm.
I would say I don't know. We could talk like part of this too is like autos. You talk about auto. That's another thing too is like bundling home and autos right now because
Hmm.
insurance companies in Colorado. That's almost the criteria now. It used to
Hmm.
just be monoline homes. That's all they could write. But now it's like it's getting to the point where hey, insurance companies won't write without the auto. So people think that
Hmm.
having low deductibles on their auto insurance is a really good thing, but they're not thinking about, hey, if I file small claims, it's going to affect my insurance score. The insurance
Hmm.
company is going to make money off of it. So it's all these little things that go into your insurance score, which is, like, I mean, I didn't think about it until I got into this business, but just when you get in, you're just like, wow, man, like everything affects this one thing which is price versus cost.
Hmm. So the word deductible, you use that a lot.
Mm-hmm.
Why is that the word that insurance companies use, and can you explain what that word means?
Yeah, sure thing. So a deductible is so let's say I'm going to go back to the roof example. I think it's a simple one, especially for homeowners and
Hmm.
investors. Um, when you're replacing a roof, and let's say you have a 1% deductible on a $500,000 home. Well, that's a
Hmm.
$5,000 deductible, and what a deductible is out of pocket. Like how much do you pay out of pocket to get the coverage that you need. So if you have a $30,000 roof we'll go back to that, the $30,000 roof, and you have a 1% deductible, okay, well now you're only having $25,000 to replace the roof, versus if you had a 2,500 flat deductible, now you're
Hmm.
paying out. So deductible is like that's how much you pay out to get the coverage that you need.
Hmm.
Um, does that make sense? I
Yeah. So
Okay.
deductible just means how much you're paying out of pocket when you file your claim. It's like, hey, you filed this claim, and that's why you want it to be the most expensive as possible, like getting a new roof, because then you're going to be like, okay, I'll get this $30,000 roof, but I only have to pay 5,000 for it, type of thing.
Exactly. Yeah.
Hmm.
And I mean, yeah, man, it's crazy. Some people have I've seen 2% on some policies. I'm like, hey, do you understand
Hmm.
what this means? And then another thing about deductibles, which is I didn't even think about talking about this, but replacement cost versus actual cash value. Replacement
Hmm.
cost is, hey, no matter how old the roof is, we'll give you the money to replace the roof or replace whatever you need. Versus actual
Hmm.
cash value, it takes the depreciation percentage. So let's say if
Hmm.
just simple numbers, I have to $10,000 claim on let's just say a water heater, but it depreciates $1,000 a year. Well, after 10 years, I mean, that thing's worth $1,000, if that. So it's going to be like,
Hmm.
oh yeah, we'll pay it out, man, no problem. You're only getting $1,000 to replace like a $15,000 water heater. So you got to make sure that when you're getting the quotes or when you're getting insurance, that you know what these little terms mean that can really affect yourself in the long term in terms of what you're covered for.
Hmm. Gotcha. That must be one big water heater, though. A water heater is
All right.
typically probably around like 2,000, maybe
Okay.
1,500. But
Well,
yeah.
that's good to know. Yeah. Right.
Probably more like a boiler system for like a large
Voices. Yeah.
apartment complex is how much that would be. But
Yeah.
speaking of
Very
like
good.
multifamily properties, say I have a duplex, is there
Okay.
anything like extended coverage that goes to like other units, or is it all just under that one DP3 policy?
Oh yeah, that's an awesome question. So if, like I say, if you lived in one of the units and then someone else lived in the other unit, you would have a typical HO3 for the
Hmm.
duplex, and then they would have their own HO4, which is the renter's policy, and
Hmm.
then it would just be one big HO policy though for you, HO3 policy.
Hmm.
Now, if you get up into like a quadplex or you have a much bigger unit, then it goes into a master policy, which is something that
Hmm.
covers everything. And then all the people that live in the individual units, they would
Hmm.
have their own HO3 policy, excuse me.
Hmm. Gotcha.
So,
Okay. So when someone purchases a home, they're talking to their insurance broker or multiple insurance brokers. What questions should they be asking to make sure that they get the best coverage and that they're all squared away on their policies?
yeah, I think the biggest question is roof age. How old is the roof? And then am I getting full replacement cost on that roof?
Hmm.
That's probably the main question that I would ask if I was buying a home is what is my roof age? And then am I getting full replacement cost on that? And then what are my deductibles? Because if you
Hmm.
understand those things, every other HO3 policy is pretty much the same. But
Hmm.
depending on roof age and then like if you have actual cash value versus replacement cost, that really determines how you're covered in the long run. And then, like I said, price versus cost. It might
Hmm.
be like $200 less a year, but if you're going to have to pay $5,000 more to replace the roof out of pocket, is it really saving you, a whole lot? So making sure that, you have the right information before you go in. Because, yeah, everyone can get a cheap policy, but you want to make sure you're asking the right questions and that you're covered for something when, let's say something terrible happens. Like, oh, let's hope not. But that's why you have insurance, is in case something terrible does happen.
Hmm. Are there any ways that one can save money on their insurance policy, or is it kind of just, shop around and see who gives you a good policy at a fair price?
Yeah, great question. I think the most common one that I'm seeing now is bundling your home and auto. So
Hmm.
if if you're, let's say, we have someone that's moving in from Texas and they're like, oh man, this is insurance out here is crazy. And you're like, yeah, yeah, I know. But the best way to get more bang for your buck is bundle your home and auto at the same carrier.
Hmm.
I'm just going to use Progressive, for example. So if you have a home that's at Progressive, fits really well at Progressive, you want to do everything in your power to get your autos at Progressive as well. It's going to give you a discount on your home and your auto because it's a
Hmm.
multi-policy.
Yeah.
Um, a new roof will definitely help you out with price. And then, like I
Hmm.
talked about earlier, dude, the amount of claims that you submit really does matter. Now, if you're
Hmm.
submitting all these small claims, some companies will just carriers will look at you and be like, "Man, well, we can't do it because we've had all of these claims." So it's
Hmm.
like I said, I would set a claim if yeah, if your house caught on fire and you lost half your house, you can't live in it. Yeah, submit a claim. But if someone breaks into a window and takes a couple things, yeah, you can file a claim for less than a
Hmm.
thousand. But is it really worth it in the long run? To have that on your record for the next 7 years. So
Yeah.
that's the simplest way I could think to save money. I would also, you can ask about deductibles, but make sure that
Hmm.
you have the money in the pocket to be able to handle that difference
Yeah.
in the future.
Hmm. Is there any way an investor can protect themselves with utilizing insurance correctly in case, they have bad tenant, for example?
Yeah, 100%. I would definitely make sure that they have. I would definitely make sure the tenant has insurance. Which is an HO4. It's just like pretty much what an HO4 is, just a renter's policy. So, let's say I'm renting from you, living in one of your rental properties. I want to, I need to make sure that I'm covered, but then also making sure that I have that DP3 and then making sure it's covered down to the absolute wire. If you don't have a solid DP3 policy
Hmm.
in place, then that's, I mean, you could be in a lot of trouble. And I think you asked me about
Hmm.
common mistakes that people make. One common mistake that I just saw with one of my clients was that she had two homeowners policies and was renting one of the homes
Hmm.
to like a long term rental, and it wasn't a DP3, it was a homeowner's policy. Well, if something happened to that
Hmm.
house, she would have no coverage. So
Yeah.
making sure that you have the right policies in place is also something that protects you. You don't want to have a bunch of rental properties and them all be homeowners. You want them to be
Hmm.
classified as the right one.
Hmm. Is there a way for us to like reach out to the tenant's insurance company in order to make sure, okay, they do have a policy, and if something happens, okay, they're covered for these type of scenarios? Like, would it mainly be personal items that are covered for that um, tenant policy, or what would that look like to make sure that I know, okay, if something happens, my tenant's insurance will take care of it?
Right. That's a great question. So yeah, they have there's a actual law. I'm sorry, it's I think it's called actual loss sustained, but it's in the HO4 policy. And
Hmm.
I can't remember the exact word. I'll have to come back to it. But essentially, what that means is if something happens, let's say you have a quadplex,
Hmm.
and it gets damaged really badly. It was one tenant's fault, but it went into all the other tenants. Like it happened in the middle unit, and it was a big fire, and it burned everyone
Hmm.
else's, smoke damage. You would want to make sure that they have the right deductibles in place so that they're not paying out tons of thousands of dollars to replace something that they didn't do. You want to make sure that they have the right coverages to be able to take care of that. And I can't
Hmm.
remember right off the top of my head, but I will have to. Yeah, it's not actual loss saying something else, so I'll have to get back
Hmm.
with you on that. But yeah,
Yeah.
I could go over with you that after we get off of this to make sure that you know what it is. But
Hmm.
um, yeah, man, you just want to make sure that your tenants have the right policies, and then yeah, I would also make sure that when they move in, that hey, do you have a policy in place before you move in? And if
Hmm.
I didn't, well, maybe you don't want those, that type of people living in your place if they're not going to,
Hmm.
insure for themselves. Maybe that's like kind of a filter saying, okay, they're not going to take care of themselves and they don't want to do X, Y, and Z to make sure they're covered if something happens. It might be a little filter saying, oh, if this is how they are with their own stuff, imagine how they are with my stuff. So,
Yeah. One last question for you.
yeah.
For roofs and timing of when you should use your policy, say you have a roof that's about 10 years old. I've heard before that once a roof gets over 13 years old, the insurance companies won't replace it if you submit a claim for hail damage, for example.
Yeah, really great question. It kind of goes back to having that roof that's 10 years or older. Um,
Hmm.
it's replacement cost versus actual cash value. So if you have a roof that
Hmm.
is, 15 years old, 13 years old, whatever the case is, it's going to depreciate. So let's say you need to replace it next year. It's, from 2010 and, we have a massive hailstorm come springtime and man, I really need to replace my roof. If you had actual cash value, that it's going to depreciate at $1,000 per year, and this is a $30,000 roof. So now you're looking at
Hmm.
$15,000 plus your deductible, which let's just for the sake of argument, it's just $1,000. So you just paid out. You're going to have to pay out $16,000 to replace a $30,000 roof, and your insurance company is going to pay out 14. Well, man, let's be honest. Most people don't have 16,000 just sitting around waiting to replace your roof. So that's where it
Hmm.
comes into replace your roof. I'm not saying often, but every 5 years. I mean, especially if you have a massive hailstorm, and then make sure
Hmm.
you're insured for the right stuff. You don't want to be insured for replacement cost versus actual cost value. You want to have that
Hmm.
sure thing that hey, something happens to my roof, I'm going to get full replacement cost for it.
Hmm. Yeah. Awesome. Cool. Well, Austin, if there's any people that want to reach out and ask you a question, where should they hit you up at?
Yeah, man, you can hit me up on Facebook. It's just Ash Burden, or
Hmm.
you could text just one of my direct lines. It's just 719-867-2077 for just simple questions.
Hmm.
But yeah, man, I'm definitely on Instagram and even LinkedIn. I really love LinkedIn. It's a professional account. It keeps me out of trouble. So it's just one of those accounts that if you have any questions, like Facebook and LinkedIn would definitely be the best places to reach me out, man. So
Awesome.
yeah.
Sweet, Ash. I appreciate you coming on. Learned a ton about insurances, and hopefully, a lot of people will have better knowledge about what they should do when they do buy a house and to get the right insurance policy. So I appreciate it.
Man, Tanner, I appreciate your time as well, man. Thanks for having me on. It's been an awesome privilege.